A syndicate has published a tombstone ad prior to the issue becoming effective. Which of the following must appear in the tombstone? 1. A statement that the registration has not yet become active. 2. A statement that the ad is not an ower to sell the securities. 3. Contact information. 4. No commitment statement. A. 3 and 4. B. 2 and 3. C. 1 and 2. D. 1, 2, 3, and 4. Answer: D. 1, 2, 3, and 4. During a new issue registration, false information is included in the prospectus to buyers. Which of the following may be held liable to investors? 1. Officers of the issuer. 2. Accountants. 3. Syndicate members. 4. People who signed the registration statement. A. 1 and 3. B. 1, 2, and 4. C. 1, 2, and 3. D. 1, 2, 3, and 4. Answer: D. 1, 2, 3, and 4. A syndicate may enter a stabilizing bid. A. Whenever the price begins to decline. B. At or below the offering price. C. To ensure an increase from the offering price. D. To cover over allotments only. Answer: B. At or below the offering price. Corporations may do all of the following, except: A. Issue preferred stock only. B. Issue non-voting common stock. C. Sell stock out of the treasury. D. Repurchase its own shares. Answer: A. Issue preferred stock only. Issuance of which of the following would require the approval of existing shareholders? A. Mortgage bonds. B. Collateral trust bonds. C. Prior lien bonds. D. Equipment trust certificates. Answer: C. Prior lien bonds. During an underwriting of a hot issue, the syndicate exercises its greenshoe provision. This will allow them to buy an additional A. 20% of the offering. B. 25% of the offering. C. 15% of the offering. D. 10% of the offering. Answer: C. 15% of the offering. Which of the following is not a type of offering? A. Rule 149 offering. B. Subsequent primary offering. C. Secondary offering. D. Combined offering. Answer: A. Rule 149 offering. Once a company decides to raise long-term capital to meet its needs, it will A. Approach the money market to determine how much capital can be raised. B. Hire an underwriter to advise the issuer about the type of securities to issue. C. Hire a dealer to issue stock for public purchase. D. Hire a broker to issue stock for public purchase. Answer: B. Hire an underwriter to advise the issuer about the type of securities to issue. A firm participating in the offering of a private placement may sell the private placement to A. No more than 12 non-accredited investors in any 12-month period. B. No more than 6 non-accredited investors in any 12-month period. C. No more than 35 non-accredited investors in any 12-month period. D. No more than 15 non-accredited investors in any 12-month period. Answer: C. No more than 35 non-accredited investors in any 12-month period. A company doing a preemptive right offering would most likely use what type of underwriting agreement? A. Best efforts. B. Firm commitment. C. All or none. D. Standby. Answer: D. Standby. A syndicate distributing a new issue of common stock contains 9 syndicate members and 12 selling group members. The stock will be listed on the NASDAQ. How many bids may be entered for the syndicate? A. 9. B. 1. C. 21. D. 0. Answer: B. 1. The subscription price of a right is A. The price offered to current stockholders during a subsequent primary offering. B. The price of buying shares from a broker. C. The price a market maker pays to buy shares. D. The price at which the new shareholders can purchase new shares. Answer A. The price offered to current stockholders during a subsequent primary offering. The SEC has been reviewing a company's registration statement and would like clarification on a few items. It would most likely A. Call the company. B. Issue a stop order. C. Issue a deficiency letter. D. Call the lead underwriter. Answer C. Issue a deficiency letter. Which of the following is not a type of underwriting commitment? A. Primary commitment. B. Standby commitment. C. Best efforts commitment. D. Firm commitment. Answer A. Primary commitment. XYZ has just gone public and is quoted on the Nasdaq Capital Market. Any investor who buys XYZ must get a prospectus for how long? A. 30 days. B. 90 days. C. 60 days. D. 45 days. Answer B. 90 days. A red herring given to a client during the cooling-off period will contain all of the following, except A. Proceeds to the company. B. Use of proceeds. C. Biographies of officers and directors. D. A notice that all the information is subject to change. Answer A. Proceeds to the company. A member of the selling group assisting in the distribution of securities in an undivided syndicate is A. Required to purchase unsold shares for its own account. B. Liable for a percentage of the unsold securities. C. Not liable for a percentage of the unsold securities. D. Responsible for a percentage of the total offering. Answer C. Not liable for a percentage of the unsold securities. When making markets over the counter, the firm is acting in what capacity? A. Dealer. B. Both. C. Neither. D. Broker. Answer A. Dealer. A bearish investor would establish a short position by entering what type of order? A. A buy stop. B. A market order to buy. C. A on. D. A sell stop order. Answer D. A sell stop order. All of the following may trade on the floor of the NYSE except A. $2 broker. B. Regular member. C. Commission house broker. D. Allied member. Answer D. Allied member. Your brokerage firm acts as a market maker for several high-volume stocks that are quoted on the Nasdaq. What is the firm's consideration for being a market maker? A. Commission. B. Fees. C. Spread. D. 5%. Answer C. Spread. All of the following are types of orders except 1. All or none. 2. Fill or kill. 3. Mini or maxi. 4. Best efforts. A. 1 and 2. B. 2 and 4. C. 1 and 4. D. 3 and 4. Answer D. 3 and 4. INTC has been hitting a lot of resistance at $30. A technical analyst who wants to buy the stock would most likely place what type of order? A. Limit order to buy at $30. B. Market order. C. Buy stop at $31. D. Buy limit at $29. Answer C. Buy stop at $31. Which of the following subjects the investor to unlimited risk? A. Selling stock short. B. Converting a bond into the underlying common stock. C. Purchase of a call. D. Selling a naked put. Answer A. Selling stock short. The inside market is 1. Highest offer. 2. Lowest offer. 3. Highest bid. 4. Lowest bid. A. 2 and 3. B. 1 and 2. C. 1 and 4. D. 1 and 3. Answer A. 2 and 3. A bullish investor would enter which of the following orders? A. A sell limit thinking that the stock price will rise. B. A sell stop below the market. C. A buy stop above the market. D. DNR GTC. Answer C. A buy stop above the market. ABC Technologies, a very volatile stock, closes at $180 per share. Your customer has placed an order to sell 500 ABC at 165 stop limit 160 GTC. After the close, the company announces bad earnings, and the stock opens at 145. What happened to your customer's order? A. It has been cancelled because the stock price is below the limit price. B. It has been elected and has become a limit order. C. It has been elected and executed. D. It has been cancelled because the stock price is below the stop price. Answer B. It has been elected and has become a limit order. You sold 10 IBM May 95 puts at 5.70. Your maximum gain is A. $570. B. $5,700. C. Unlimited. D. $95,000. Answer B. $5,700. Your customer sells 10 IBM NOV 95 puts to open at 3.15. Their maximum gain is A. Unlimited. B. $95,000. C. $3,150. D. $91,850. Answer C. $3,150. You are long 10,000 shares of XYZ at 42 and are concerned about a market decline, and you would like to take in some additional income. You should A. Sell 10 XYZ October 45 puts. B. Sell 100 XYZ October 45 calls. C. Sell 100 XYZ October 45 puts. D. Sell 10 XYZ October 45 calls. Answer B. Sell 100 XYZ October 45 calls. Which of the following are true about an option? 1. It is a contract between two parties that determines the time and place at which a security may be bought or sold. 2. The two parties are known as the buyer and the seller. The money paid by the buyer of the option is known as the option's premium. 3. The buyer has bought the right to buy or sell the security depending on the type of option. 4. The seller has an obligation to perform under the contract, possibly to buy or sell the stock depending on the option involved. A. 1, 3, and 4. B. 1, 2, 3, and 4. C. 1, 2, and 3. D. 2, 3, and 4. Answer D. 2, 3, and 4. Which of the following are bearish? 1. Call seller. 2. Put seller. 3. Call buyer. 4. Put buyer. A. 2 and 3. B. 2 and 4. C. 1 and 4. D. 1 and 2. Answer C. 1 and 4. An investor buys 10 XYZ NOV 75 calls at 4.10 on Monday, May 11th. The trade will settle on A. Thursday, May 14th. B. Tuesday, May 12th. C. Monday, May 11th. D. Monday, May 18th. Answer B. Tuesday, May 12th. Which of the following issues standardized options? A. Exchanges. B. OCC. C. Company. D. NASDAQ. Answer B. OCC. An investor buys 10 XYZ May 70 calls at 3.10 when XYZ is at 68. At expiration, the stock is at 77 and the investor closes out the position at its intrinsic value. What is the profit or loss? A. $7,000 profit. B. $7,000 loss. C. $3,100 loss. D. $3,900 profit. Answer: D. $3,900 profit. The OCC is A. Options Clearing Corporation. B. Options Counseling Committee. C. Options and Claims Corporation. D. Options Clearing Committee. Answer: A. Options Clearing Corporation.